right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Tuesday, everybody. Today is May 26th, 2026. We had an awfully soggy Memorial Day weekend up here in the Northeast. And to go along with the rain and the gray skies, we had nonstop 3-day weekend of jawboning oil prices lower, with this hour by hour anonymously sourced, according to some guy familiar with some matter, that an Iran deal was coming out any minute now. We had this story over and over again for days. We had oil went as low as $89.41 for WTI crude over the last couple of hours. Oil was trading yesterday, even though stocks were closed. Look, we got all of this optimism, and what was it based on? I don't know, because last night we started shooting at each other again, or at least yesterday we started shooting at each other again. We had missiles were fired at Iranian fast boats that were laying mines in the Strait of Hormuz yesterday. We had airstrikes on missile launch sites in southern Iran. Apparently there were explosions in Bandar Abbas. That's where Iran's big Navy base is and the big IRGC base is. Iran supposedly fired at U.S. destroyers in the Strait. They also claim to have shot down a Mark 9 Reaper drone. They also targeted an F-35, although I don't think it was hit. So we're shooting at each other, a whole bunch of shots fired, but it's very important that we all understand the ceasefire is still in effect. And if somebody wants to explain to me how those two things can be true at the same time, I would just be delighted to understand that. And that's where we're at right now. We're apparently closer to peace than we've ever been, even though we just killed a bunch of people. We just blew up a bunch of stuff. I clearly don't understand the finer points of diplomacy that are at work here. I've always been kind of a classical thinker when it comes to ceasefires, that you don't shoot during a ceasefire. That's kind of always been my shtick. But then again, I am not skilled in manners of diplomacy, so who knows? So they're still talking about tolls in the Strait of Hormuz. Oh wait, I'm sorry, it's not a toll; it's a fee now. An environmental protection fee, as in if you don't pay our not toll environmental protection fee, we'll put a gaping hole in the side of your oil tanker and flood the environment with oil. So it's not extortion, it's protection racket. So obviously the toll is still a thing. We had stories were breaking yesterday that, the enriched uranium, the Iranians were going to send the enriched uranium to China. And then the Iranians came out and said, no, that's fake news. So that story was on again, off again. Now we're talking about $24 billion in frozen assets being unfrozen for the Iranians as a condition of this deal. At least that's the soup du jour this morning. We'll see. One side says a thing in the press. The other side says the opposite thing. All of these things aside, we're obviously still very far apart on this. All right. We're no closer to a deal than we were 3 days ago, even though if you just tell people there's a deal coming any day now, apparently they'll bid down oil futures because that worked. I mean, oil is up off of its lows, but it's still way down from where we ended the week, below the 50-day moving average. So the jawboning is proving effective yet again. Now, the other story going on, we have an emerging cost crisis brewing in the AI space. TokenMaxxing is causing all kinds of problems here. I've got 3 different articles to that effect this morning from various sources. Look, Anthropic changed over to token-based billing a couple of months ago. And token is basically just a unit of data you send to or get back from AI. It's our measurement of consumption. Token is the unit that we're using. And Anthropic used to have this monthly subscription. You pay a flat fee, unlimited tokens. They recently changed to token-based billing. And the reason why they did that is when OpenClaw was released and agentic AI went mainstream and everybody started creating AI agents to run 24/7, doing whatever, sorting their emails, scheduling their meetings, running their websites. I don't know. I don't use AI agents, but the software developers swear up and down that it's awesome. Well, that forced Anthropic to go into token-based billing because the flat subscription fee wasn't covering it for these users that were using it so much. And so when they switched over to token-based billing, all of a sudden you went from $100 a month for the good version to more than you were paying that person who was using the AI agents. And remember, the whole point of AI and agents is we're going to displace white collar work and make it cheaper. Well, if one guy is using 10 times his salary worth of tokens in AI agents, then, well, he's not really saving the company any money, is he? And over the last couple of days, we have had stories. Microsoft is canceling their Claude Code subscriptions in favor of Copilot. All right, so they're still using agentic AI, but they're going to use their own AI instead of Anthropic. This way, probably Microsoft can bill themselves and report it as revenue. It's kind of par for the course. Meta and Amazon supposedly doing something similar. Uber COO is out in the news saying it's getting harder to justify the money spent on AI. Uber made news not too long ago. They blew through their whole year worth of AI budget in 4 months, thanks to the changeover to token-based pricing. And we've got Target is talking about how token-based billing is forcing them to reevaluate their AI strategy. So all of these stories have one thing in common. All of these companies are saying we're spending all this money and we can't justify it. There's no return on investment. We're wasting this money. Look, Anthropic is trying to shove that IPO out the door as fast as they can here because they are seeing an explosion in their revenue, right? As token-based billing went into effect and all these companies blew through their budgets in 1 or 2 months, that means Anthropic's revenue blew out to the upside. But now all these companies are scaling back and saying, well, we're rethinking our strategy. That would suggest Anthropic's revenue has peaked, which means Anthropic has a very short window to get that IPO done before all hell breaks loose. So we'll see what comes out of that story. Meanwhile, NVIDIA's CEO is urging Supermicro to, and I quote, tighten up compliance, kind of like that time George Washington urged Benedict Arnold to tighten up his compliance. Yeah, you're an effing traitor and you sold out your country in order to illegally ship technology with military applications to the Chinese in violation of U.S. export controls. You got caught. Your co-founder got indicted along with 2 others in the U.S. Then we even had 3 more people at Supermicro got indicted in Taiwan last week. And so Jensen Huang, who swears he doesn't know anything about his 3rd largest customer exporting billions of dollars of his product to the Chinese, now he's urging Supermicro to tighten up compliance. Yep. Compliance got awful loose over there at Supermicro. By the way, I'd just like to send a 1-finger salute to all the people who told me I was a crazy conspiracy theorist. Oh, let's put this on. Yeah, a crazy conspiracy theorist. And I had no proof that Supermicro and NVIDIA were violating export controls, sending those chips to China. Yep. Is there still no proof? Is really, guy? Despite videos of guys in China holding up H100 GPUs saying, look at my H100 GPU. Yeah, other than all the proof sitting on your face, there's no proof. What else we got going on? Ferrari has unveiled its first electric vehicle, and the stock is tanking on that news. What else we have? Indonesia, this resource nationalization story in Indonesia. This one's getting kind of wild here. There's more. We've been talking about this one. I've been calling it the Venezuelization of Indonesia. Now they're probing their 10 largest palm export companies for export abuses, whatever that means. Indonesia is just taking over all of its natural resources trade, which means the government's going to take it over, run it into the ground, and destroy it. We've got another one developing over at BP this morning. The chairman of the board at BP was just abruptly fired in a unanimous decision by the other board members over, and I'm quoting here, conduct and governance issues. And they're not really saying much more. You know, there's very few things that will get you ousted instantly and unanimously related to conduct. Look, I'm not really sure what's going on over at BP. I know this story's enough to drop the stock by 5% this morning, and I suspect we're going to be hearing a lot more about whatever this guy did in the days ahead. And we've got to wrap up the show with consumer sentiment. The University of Michigan released their consumer sentiment on Friday. And, well, that survey, it's been pretty bad lately, and it got pretty badder. It's not just pretty bad. It's dreadful. As a matter of fact, it's the worst it's been in its near 80-year history, and that's after a big drop in the last month from the prior low. That was also the lowest in its near 80-year history. But remember, the good folks on CNBC would like us to remind you that the economy is humming along. It's strongest, best economy ever. Just don't ask anybody who actually lives in it. Guys, we got a lot to talk about this morning. Why don't we shrink my big melon of a head and let's see what's going on in the world of finance. Don't forget that like button and that subscribe button for the YouTube algorithm so you can come back tomorrow and have your coffee with the melon heads, because we do this every business day. And right now, the S&P 500 is higher on that Iranian deal or no deal, 51.5 points to the upside, 0.69% in the green this morning. The Dow is also up on Iranian optimism, 217 points higher, or 0.43% in the green, although you will note we are off the highs of the morning here. And the NASDAQ is leading the way higher, up 357 points. Relentless optimism in tech continues, 1.21% higher, even though I've got multiple headlines about companies planning to cut back on their spending on AI because they blew out their budgets too quick, but AI stocks still going up. The dollar is a little bit stronger this morning, up 16 basis points at 99.13. And looking over at the bond market, we've got yields are lower across the board here. A lot of bond buying going on. The 30-year yield, 5.015, down almost 7 basis points this morning. The 10-year yield is down significantly here, 4.49, off by 8 points and change. Remember, guys, we were like 4.69 only a couple of days ago. So the bond market, we're seeing a lot of bond buying. Now, typically, bond buying is a sign of panic, safe haven demand. That's not what's going on right now. Bonds are being bought right now because of the lower oil prices. This is actually a risk-on move here. I know it's somewhat counterintuitive, but bonds have been inexorably tied to the price of oil recently. Today is no exception. The 2-year yield, 4.057. That's off by 7 basis points. And the 1 month is at 3.670, unchanged for the morning. Looking over at Bitcoin, it's pretty much unchanged here from yesterday. 77,000 even, down by about $230. Bitcoin not doing a lot this morning. Looking over at the commodities board, we've got gold is lower at 45.23, down by about $46 or 1% in the red this morning. Spot silver is at 76.25, lower by $1.84 or 2.38%. I still like the shiny. Copper is higher by 0.18%. Platinum is higher by 0.86%. Palladium up 2.8%. Crude oil way down here, 4% lower at 92.74. We'll look at the oil chart in just a minute here, but I do want to show you a couple of gold headlines. This is kind of interesting. Malaysia jolts bullion trade with 10% import duty on gold bars. This one's kind of surprising here. I don't really know why we're seeing this. India has done the same thing. India has put big tariffs on gold imports, mainly to defend the Indian rupee. But I was looking at the Malaysian ringgit this morning, and the Malaysian ringgit isn't really struggling here. It's actually been strengthening against the dollar. So I'm not really sure what the end game is here for the Malaysians and why they're doing this, but this is going to eliminate some of the demand for gold, right? That's going to put a little bit more gold on the market globally, and it's also going to take gold off the market locally. So you're going to see some more of these regional dislocations in gold price like we're probably seeing in India right now. And at the same time, we've got Uzbekistan resumes gold exports with $1.5 billion through April. Now, Uzbekistan halted gold exports back in December when the gold prices were rising. Their central bank decided they were going to buy it all up. Well, now their central bank has actually sold a little bit of their gold reserves, and they're finally allowing the exports. So this is going to allow a little bit more metal to reach the global markets. So I'd say both of these stories are probably a little bit bearish for spot gold prices. I don't think excessively so. But we are seeing a lot of government intervention across the world in gold markets here. We saw it in India. Now we're seeing it in Malaysia and Uzbekistan. Wait, we got to get to the oil chart. All right. So here's the oil chart, 92.77, down by $4 and change. All right. Big drop at the open here from where we were on Friday. And the important thing is on Friday, we gave up the 50-day moving average. That's important because the 50-day moving average had held several times since the beginning of this crisis. No longer the case. We had a big gap down, but you'll notice the wick at the bottom of this candle Oil is well off its lows this morning. Let's change this over to, say, 1 minute candles here and then zoom out a little bit on the chart. You can see oil bottomed out yesterday around, what time was that? It's hard to see. Around 11, 12, I guess midday yesterday. And that's when the story started breaking about boats being attacked in the Strait of Hormuz. A couple of Iranian fast boats were blown up. Explosions heard around Bandar Abbas. Reaper drone shot down. Well, let's just talk about what we heard midday yesterday. U.S. and Iran clashed near Hormuz, even as both tout talks progress. And that pretty much sums up the weekend, like just minute by minute. Oh, peace any minute now, any day now, we're going to have a deal, even though they're still shooting at each other. U.S. and Iranian forces clashed near the Strait of Hormuz overnight, highlighting the tension between the two sides, even as they tout progress toward an interim peace deal. The strikes came hours after President Donald Trump reiterated that negotiations with Tehran to extend their ceasefire and reopen the strait were proceeding, and just before Iran's supreme leader, Mojtaba Khamenei, published a statement warning that the nations and lands of the region will no longer be a shield for American bases. The 56-year-old supreme leader, who hasn't been seen in public since his appointment in March, didn't suggest there were new stumbling blocks in talks to criticize the U.S. for the clashes on Monday night. But the exchange underscored the confusion that's characterized the talks since a ceasefire was struck early last month. Again, this is ceasefire in name only. There's a lot of talking back and forth about specific language in the initial document, so it'll take a few days. U.S. Secretary of State Marco Rubio told reporters in India on Tuesday morning. So we're back to it'll take a few days. I mean, it was going to take a few days ago, a month ago even. Imminent was the word being thrown around all weekend. Apparently not, because they're shooting again. But it's working. Oil is lower. Just jawboning. All right. Meanwhile, we've got this AI cost crisis is brewing, and we've got a couple of headlines to this effect this morning. AI cost crisis hits tech giants as employee token-maxing backfires, sparking corporate pullback at Microsoft, Meta, and Amazon. Agentic AI eats up to 1,000 times more tokens than standard AI. And then we've got this little byline here. AI is getting too expensive. Oh, you think? You think? Nah, what's a few trillion among friends? Many tech companies are pushing their employees to use AI tools and increase their productivity, but it seems that this initiative has begun to backfire. According to The Verge, Microsoft has been reportedly pushing its people to switch to its own Copilot CLI rather than Claude Code because it wants to use an internal tool rather than a third-party one. However, sources say the primary reason is that the cost of using Claude Code has been steadily increasing as more people use the AI tool. Microsoft is not alone in this, as Fortune reports that other companies are also pulling back on AI usage. While it's true that the cost of training AI models is falling, making AI tokens more affordable, people have started using more tokens in their day-to-day tasks. This is particularly true for agentic AI, which can use 1,000 times more tokens compared to querying a large language model, depending on the number of steps needed to accomplish your instructions. For example, OpenClaw creator Peter Steinberger claimed that his team spent more than $1.3 million in token costs in just a single month. Because of this, it's now apparent that using AI is more expensive than hiring people, especially since it offers only limited productivity gains at the moment. And again, do you guys understand what that last sentence means for the United States economy and for all of the hundreds of billions in AI capex that has been spent? Let me read that again. It is now apparent that using AI is more expensive than hiring people, especially since it offers only limited productivity gains at the moment. Well, it's a good thing we didn't just mortgage everything. It's a good thing we didn't spend everybody's 401k and pension money and start special purpose vehicles to take on hidden debt to build out data centers for this technology that will somehow replace people, even though, and I repeat, using AI is more expensive than hiring people, especially since it offers only limited productivity gains at the moment. Good God. It's unclear yet whether these companies will change their policies now that increased token use, which comes with associated costs, has become an issue. AI is indeed a useful tool, but some companies are using it to replace people in a bid to cut labor costs. If the number of tokens needed to accomplish tasks outpaces the spend at which these tokens become cheaper, outpaces the speed at which these tokens become cheaper, then that move might just backfire. All right, so that's the big tech companies and their token maxing problem. But it seems Uber has this problem too. Uber COO says it's getting harder to justify the money spent on AI token maxing. And again, token maxing is the practice of using AI agents for mundane tasks just to inflate your usage to make yourself appear more productive. In other words, it's just fake. A top Uber exec said AI is not giving the company bang for its buck. Shocking turn of events, I know. In a rapid response interview released on Saturday, Uber's operations chief, Andrew McDonald, said it was becoming harder to justify AI costs within the company. He said that Uber CTO Praveen Napalinaga went viral after telling the information in an April interview that Uber had already blown through its Claude Code budget for 2026. The comment led to what he described as a head-exploding moment, sparking discussions about AI token consumption within the company and the trade-offs it creates, such as on headcount. He said that based on talks with Uber's senior engineering leaders, he realized higher token usage did not translate into proportional increases in useful consumer features. Okay, let me translate that. Higher token usage does not translate to proportional increases in useful consumer features. It almost sounds like there's no productivity gain or there's no return on investment. It almost sounds like it's not worth the money we're spending, which means they're not going to keep spending it. That's Uber on top of Microsoft and Amazon and Meta. But wait, Target pushes deeper AI adoption, but reviews usage-based pricing, India Head says. And I love this, how you got to start with the optimism, right? Because it's got to be an AI positive article because the press is so hopelessly attached itself to this bubble. They have to say, we're pushing deeper adoption. Yeah, but we're reviewing our usage-based pricing, which means we're about to not push adoption. Target is moving from using AI to running AI, but a shift in the pricing of the technology by its providers is prompting the U.S. retailer to reassess the way it is deployed, its India head told Reuters on Monday. Once again, that change to token-based pricing is causing problems. It's about the intentional use of integration of AI rather than deploying it everywhere, Target India President Andrea Zimmerman said. All right, so we're not arbitrarily replacing the whole company with AI agents. Now we're going to be targeted and intentional. We're going to be measured in our response even. She said there are significant investments being made in ensuring that teams have the right tools for their jobs. AI firms such as Anthropic and OpenAI are increasingly shifting to token-based pricing that charges customers based on usage instead of subscription-based service, reflecting a broader reset in AI economics and raising costs for enterprises. It's forcing us to reevaluate our strategy, Zimmerman said. Discussions around AI pricing are at the highest level in both our architecture forums as well as our senior leadership forums within technology, she told Reuters at a summit in Bengaluru. So Target rethinking their use of agentic AI because of token-based pricing. That is 3 different headlines, all within a span of a couple of days, about how token maxing and this change to token-based pricing is causing these companies to rethink it because AI just got a hell of a lot more expensive, which means all these stories about, Anthropic's annual revenue run rate or whatever they call it, whatever statistic they're using at the day, it's about to peak because they blew it out. They just used too much of it. They pigged out. They had to change to token-based pricing because they were losing too much money. And so when companies are actually faced with the real cost of AI, not the subsidized cost, your 401k paying for them to use it at a loss, well, all of a sudden nobody wants to use it anymore. And then we've got NVIDIA CEO urges Supermicro to tighten up on compliance. Yeah, don't be a traitor, Supermicro, American company with an American CEO. Don't do treason or, tighten up on compliance. Whatever polls better in focus groups, Jensen, am I right? NVIDIA CEO Jensen Huang urged Supermicro Computer to tighten up on compliance after Taiwan detained 3 people this week for allegedly making fraudulent declarations about AI servers made by its U.S. partner. And by making fraudulent declarations, they were illegally shipping the servers to China. That thing that the AI bros told me I was crazy for saying was happening, it's happening again. The development marked the island's first crackdown on semiconductor smuggling, which grew after the U.S. slapped restrictions on exports of high-end chips such as NVIDIA's AI accelerators to China. NVIDIA is rigorous in explaining regulations to all of its partners, Huang told reporters after arriving in Taipei on Saturday. Well, we tell all our customers not to break the law. If they do it, I guess it's not our fault. Yeah, no, sorry. That playing stupid, Jensen. You can't be Superman and Albert Einstein and Stephen Hawking when you're giving a TED talk and then be deaf, dumb, and blind when your customers break the law. You got to pick one, bud. Ultimately, Supermicro has to run their own company, Huang said in response to the Taiwan case. I hope that they will enhance and improve their regulation compliance and avoid that from happening in the future. Well, Jensen, if you know they're breaking the law, then you have an obligation under U.S. export controls to not sell to them. Let's see if he does that, or if they just let him get away with it because his company's so big. Servers of Supermicro are also the subject of the biggest chip smuggling prosecution in the U.S., where authorities arrested the firm's co-founder for allegedly diverting billions of dollars worth of NVIDIA chips to China. He has pled not guilty. That case reverberated from Silicon Valley to Southeast Asia, a sign that Washington is getting serious about addressing a chip smuggling problem that Huang once denied exists. Yeah, well, of course he denied exists. He was getting rich off of it. And again, the one finger salute to all the people who told me I was a crazy conspiracy theorist for saying this was happening. By the way, this is two separate busts, by the way. The Taiwan story and the U.S. story. Two different investigations, two different sets of people indicted. The Taiwan case was initiated independently and is not directly linked to the U.S. indictment, according to a spokesperson for the island's prosecutor's office. However, whether the two cases are connected in any way will require further investigation to determine, the prosecutorial spokesperson said last week. This is the same Supermicro that has now had two different accounting scandals in 6 years. Yeah, okay. Good luck with that one, guys. Meanwhile, the market has spoken, and Ferrari shares fall 6% after the car maker unveils their first fully electric vehicle. And there it is. It is kind of ugly. It doesn't even look like a Ferrari. But yeah, that's the new Ferrari, the Luce. I had to Google how to pronounce that. Shares of luxury car maker Ferrari fell sharply on Tuesday, shortly after the company launched its first fully electric vehicle. The Maranello, Italy-based sports car manufacturer, unveiled the Luce, which translates as light, at a venue in Rome, describing the choice of name as one that evokes clarity and direction. The highly anticipated model marks a departure from the aesthetic of typical Ferraris and comes even as other luxury car manufacturers, notably Porsche and Lamborghini, have scaled back on plans to launch their own EVs due to weak demand. Let's see. Ferrari's first ever five-seater car, the Luce model, hit 60 miles per hour in around 2.5 seconds and a maximum speed of roughly 192 miles per hour. This thing is faster than something really fast. 0 to 60 in 2.5 seconds. That will cause neck pain. Let's just put it that way. All right. So it's not the performance that has people upset about this car. The Luce is priced around 550,000 euros, or roughly $640,000. That might be a factor. With customer deliveries scheduled to begin from the fourth quarter of the year, Ferrari said it had chosen to develop and manufacture all components in-house in Maranello, while the design was entrusted to Love From, an agency founded by former Apple design chief Jony Ive. And, well, Jony Ive, apparently market didn't like your apparently iPad-inspired Ferrari here, because look at Ferrari stock this morning, down 7.1% after this announcement. People not happy with this one, although Ferrari still had a good couple of days. It's basically back to where it was trading a week ago. Meanwhile, Indonesia probes major palm oil companies on export price issues. Indonesia is getting serious about nationalizing their natural resources. Every day, it seems, we've got another headline out of Indonesia to this effect. Indonesia is probing some of the world's biggest palm oil companies for suspected export abuses, adding to the upheaval in the industry days after the government announced a plan to nationalize shipments of the crop. Wilmer International and Musim Mas Group are among 10 palm producers being probed for suspected under-invoicing and transfer pricing of exports, which are key concerns of President Prabowo Subianto, Finance Minister Purbaya Yudi Sadewa. Oh my God, I'm mispronouncing all this stuff. They told reporters in Jakarta on Tuesday. Under invoicing is a practice in which a full value of exports isn't declared, allowing profits to be shifted to lower tax jurisdictions. The issues were among the reasons the president gave last week when announcing the government would take control of the country's key commodity exports. The sudden and sweeping plan marks the Prabowo administration's latest move against perceived abuses in Indonesia's vast natural resources industry, with the government also seizing millions of hectares of plantations and mines for improper land management. Guys, this is exactly the playbook of the socialists in Venezuela. This is what they did in the early 2000s. And 26 years later, the whole country was dumpster diving. And I have no reason to believe this is going to go any different. Now, that being said, under invoicing and transfer pricing, that's a pretty common thing, or at least a pretty common scam. What they're accusing these companies of is, let's say you sell palm oil and you want to minimize your taxes. So you set up a shell company. Let's say hypothetically you're the CoreWeave founders and you want to do transfer mispricing for carbon credits. You'll set up a shell company in the Cayman Islands, as the CoreWeave founders had a network of 20 to 60 shell companies in the Cayman Islands. It's something I pointed out years ago and nobody cared. So what you do is you sell your palm oil to your Cayman Island subsidiary, and you sell it at an artificially low price, barely break even. So you have no profits to report in your home country of Indonesia. Then your Cayman Island subsidiary sells them to, hypothetically, the UK at the fair market price, which is significantly higher. Well, all of those profits are booked in the Cayman Islands, which is a very favorable tax environment, and so you pay almost nothing in taxes. That is known as transfer mispricing. That's what the Indonesian administration is accusing them of doing. That's what the CoreWeave guys used to do with their carbon credits back when they ran a company called NatSource. And gee, if only there were clues that these guys were crooks ahead of time. But anyway, I digress. All right, this story. A lot of people scratching their heads at this one this morning. I think we'll probably hear more about this before the end of the week. BP's chairman, Albert Manifold, unanimously removed by the board. He took over as chairman of the British energy major in October. BP said its chairman, Albert Manifold, would step down with immediate effect after issues related to governance standards, oversight, and conduct were raised with the board. Manifold took over as chairman of the British energy major in October. The company said the board unanimously decided he should no longer serve as chair after learning of governance, oversight, and conduct issues that it deemed unacceptable. All right, governance, oversight, and conduct issues that it deemed unacceptable. This guy was either rigging prices or sleeping with an intern or something. I don't know. But to be removed effective immediately in a unanimous vote. Conduct issues makes me lean towards the thing with the intern. Governance oversight makes me lean towards some type of crookery or other dirtbaggery. Either way, guys, BP shares not looking so good this morning, down 4.35%. Off the lows of the morning, though. Company's going to have to follow this up with something more specific, currently trading at $42.43. And last but not least, we got to talk about United States, Michigan consumer sentiment. And guys, it's been bad for a while, but it just got a whole hell of a lot worse. The University of Michigan's consumer sentiment index plunged to a record low of 44.8 in May of 2026. Revised down from a preliminary 48.2 and marking the third straight monthly decline as Strait of Hormuz supply disruptions continue to push gasoline prices higher. The cost of living remained the top concern, with 57% of consumers spontaneously citing high prices as eroding their personal finances. Lower income consumers and those without college degrees posted the steepest declines, as these groups are more sensitive to rising gas and essential costs. And guys, the number in April, that 49.8, that was already the lowest figure in history. And again, this goes back almost 80 freaking years. That was already the lowest point in history, and we just took a nosedive from that cliff, currently 44.8. Predominantly gasoline. This is the lower K. All right, this doesn't care what the indexes are doing on CNBC. It doesn't care what Tom Lee is doing with Bitmine or what Jim Cramer says. This is people living in the real world. Their income is this, their expenses are that. What's the difference? And these are people who generally don't own a lot of assets, so they don't care that stocks are going up or gold is going up. And look, 44.8. They've never been this pessimistic. How do you rectify a consumer that is this down in the dumps versus a market and asset prices that are head in the clouds euphoria stage. Again, the K-shaped economy. Shout out to Lox Ganapathy. When I interviewed her back in January, she said that was going to be her biggest theme of this year was the K-shaped economy. And look, the gap between the upper K and the lower K, it's getting bigger and bigger. And I always say there's an invisible rubber band between those two arms of the K. And the further apart they get, the stronger the tension between them gets. Sooner or later, one of those arms is going to break and snap back to the other. This is really bad, guys. And look, we're predominantly a consumer-driven economy. About 70% of GDP is driven by consumption. And so sooner or later, it's going to get to the point where the consumption will be so bad, it doesn't matter how much government spending you have. It doesn't matter how much data center construction you have, or if we're dumping the Strategic Petroleum Reserve and exporting the oil, artificially inflating GDP in the process. If the consumer breaks, the economy breaks with him. And, well, again, this is a survey. It's unscientific. University of Michigan does this. So maybe this is vulnerable to selection bias or some other thing. But it has never been this bad in its 80-year history. Yikes. Very yikes. And I just want to say thank you, everybody, for having your coffee with the Melonheads this morning. Don't forget that like button and that subscribe button on the way out. Thank you very much to my magnanimous Melonheads on YouTube, Patreon, and Buy Me a Coffee for supporting the channel. There are links down below should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.